Hi there and welcome to another series of Yoho 2021 with me, Michelle Attoh. It's such a pleasure to be on your screens once again. Now, I did promise you that we're going to have a set of series and episodes that will touch on the entire journey acquisition of acquiring your dream home. Now, it is time that this year in 2021, you move from tenant to homeowner. Now, today specifically, we're touching on the subject of how you can generate more income by buying a property to let. And to discuss that in detail and further, I have with me the lovely, the lady in blue, none other than Elizabeth Ashie. How are you, darling?
I'm very well, thank you.
I think that your whole mask goes with the entire ensemble.
I'm always, I love colors.
You do?
Yes. So I'm always dressed and I'm always in shouting colors, if I should say.
I think that the colors complement each other. They complement the brand as well that you represent, because the color blue is what you also have, or turquoise. You have a bit of turquoise in your face mask. But let's move from fashion sense and fashion, a love of colors. Let's touch on the subject of acquiring a property to let. The first question I wanted to ask you was, what exactly is that product under the home loan portfolio?
Okay, thank you, Michelle, for hosting me.
You're welcome.
Buy to let is one of our home purchase products. It's been running for quite a number of years now. It's a product which allows existing clients or existing homeowners to purchase another property for investment purposes. So to generate income, just like you said in your introduction. So to generate income basically from other sources. And that income also serves as a support for your mortgage repayments.
Okay. Now you said existing customers. Does that mean that these are customers under the First National Bank customer base?
Not only customers under the First National Bank base, but assuming you have a facility running with us already, and then we know you have purchased a home and you're buying another one, then that is not your first time property. So that's a buy to let, or that's a home purchase. But with a buy to let, we know that because you're an existing client, you're buying that for investment purposes.
So customers that have been with you for how long exactly? Because let's look at scenarios where you have a customer that has been with you for maybe say the last 10 years or so. So you've been able to study their journey, be able to sort of, understand their credit worthiness, and able to understand their, their general basic understanding of the customer. Does it mean that there's a specific window in which you have to know this customer, or could it be maybe 2-year window or a 5-year window, or possibly even a 10-year window? How long must you know this customer?
Okay, so how long we should know the customer should be at least a year. Because per our credit policy, if you take a facility, then we should know how the client is able to service the facility with regards to the customer behavior for at least a year. Then we know that this is a potential client, this is a good client that when we give a facility an additional or an extra to, it wouldn't go into a bad loan or something like that.
So do you use the customer's asset that they acquired through you to assess the application for the buy to let?
Not only are we going to use that, but we are using because it's a buy to let, then it's going to be a product on its own. So it's a second property. So we are registering that as a different property on its own. Unless, of course, you're using the existing one to do an equity release. I think we'll get back to that.
So is that part of the buy to let, or that's a totally different?
That's a totally different.
I'm sure we're going to touch on that as well, but let's focus primarily on the buy to let. So this is the customer you've known for approximately between 1 year to 5 years. You've understood the customer's journey, as you said. You've understood their patterns, their frequency of loan repayments, their consistency as well in honoring their payments on a monthly basis. What other things do you look out for in terms of due diligence towards this request that the customer will make to purchase and to let?
Okay, so in all our products, we conduct due diligence on both the applicant and then the vendor.
Okay.
So if you're buying from a private vendor or you're buying from a developer, we do conduct due diligence with our searches, our surveys, our valuations to know the right value, the owner of the property. We know that whoever we are going to disburse the funds to is the rightful owner.
Okay.
So all that is taken into consideration before we disburse.
Okay. What are some of the things that you advise the customer to look out for in terms of generating income that would yield them profits and not just buying because it's a fad and there's a lot of rush in buying property because probably the real estate sector has picked up? What are some of the things you would say to a customer that they should look out for in terms of how they can generate their ROI from their investment?
Okay, so you have to look at an area where you get a rental income or you get tenants as quick as possible.
Okay.
Because the moment you don't have a client or you don't have a tenant to fill that vacuum, then that means you're going to rely solely on your salary, or let me say your monthly income for the mortgage repayment. So one, you should consider the area where you're going to get the second property.
So the area is relative, and I want you to give us like 3 different scenarios. So scenario number 1, area being maybe, say, let's call it zone A. What would a zone A be in your view?
If you say a zone A, for our zone A, would you want me to mention locations?
Absolutely.
Okay, so as zone A, we are looking at the prime locations. So we are looking at cantonments. We are looking at airport, residential area. We are looking at East Legon. We are looking at Regimanuel Gray.
And then the list continues.
Exactly.
So let's look at Zone B.
Zone B. Zone B, we should zone into Jawulu
area.
We're looking at Tesano.
Okay.
But you have just a few properties around these areas.
But times are changing. With the new normal that we're in right now, the economy is a little, volatile. So to determine that, what would you say would be what are the indicators? How does one know whether they should go for a zone A, a zone B, or a zone C?
Okay, so going in for a property, we should look at, if you're going for the zone A, then look at apartments.
Okay.
I'll advise that you look at the apartments.
Okay.
So there are a lot of developers that are springing around those areas because most of them, let me say, the expats that are coming into the country, and with regards to proximity to work, most of them are in those areas. So if you're looking at the zone A, you should look at the apartments because they move fast.
Oh, I like the fact that you stressed that. So that's for zone A's. What about zone B's?
Zone B's, you can get some apartments as well.
Okay.
And then the rental income as well from that side is also a bit, let me say, it's relatively okay.
Okay.
I won't say expensive, I won't say cheap, but it's relatively okay.
I know that most buyers will probably use the developers, as a reference point, who also have agents who would give them some kind of advice. But just to double check and to be absolutely sure, would you highly recommend to our viewers that they should speak to you as well? Because it's always best to have 2 opinions on such a big investment that you're going to make and such a big decision that you need to make towards your purchase of your property. What would you advise?
Okay, so I'll say that our doors are always open. So there are mortgage consultants to speak to.
Okay.
Anyone, I'm always available to speak to. And then you can speak to the developers as well. We do have a properties unit that can also assist you with regards to getting a property and your location. We do work with your location, your budget, your preference, and all that.
I think it's very helpful to know that you have a department that is purely dedicated in taking the customer, taking you through this journey where the assessment is done, the recommendations are done, the cash projections are also done, because it's important to have your cash projections even with incidentals, because times are changing, the interest rates of everything are changing, inflation is, we don't know, it changes. So it's best to have someone that will give you the right advice as to how to plan properly, especially if you're making these monthly repayments. Because, for instance, like Elizabeth said, if it is that you have an income that is purely the basis for which you're making your repayment, it might be a bit too heavy on the customer. So it's best to speak to a consultant within the units of First National Bank for them to advise you as to how you can compensate that income so you can meet your monthly repayments without any defaults or any delays. I wanted us to touch on the features of the loan. What are some of the features? What are some of the things that the customer should look out for?
Okay, so we're going to, once you identify the property, we're going to do up to maximum 75% the value of the property.
Okay.
And then the applicant will do a minimum of 25%.
Okay.
We also have a facility for non-residents where they also finance up to 70%. Sorry, we will finance up to 70%, and then they do a minimum of 30%. But assessment is basically on their income. So your income exposure and then your monthly repayment should be around 40%, not more than 40% of your monthly income.
Now let's touch on the tenor. How long is this facility for?
Okay, so we have the CD facility, we have the pound, and we have the dollar. The CD and the pound are for 10 years, and the dollar we can do 15 years.
So if the customer wanted you to expand the tenor, is there a possibility to consider that?
Exactly. There's the option to do a restructure, or there's the option to expand the tenor to maximum 20 years, but that will be on the dollar facility.
Why is it not on the local currency as well?
Currently, I would say that you mentioned inflation. And then our depreciation risk, the borrowing in CD, and you wouldn't know how the rates are going to be in future. So we'd like to peg it down, not to stress the client and also the bank as well.
Okay, but there is an option at some point in time to restructure the repayment. What time frame would you advise this window would be in? What, between how many years? So if it's a 20, you mentioned maximum a 10-year, 15-year window. But at which point in time can the customer say to you or come to you and say, times have changed, you know, we need to reconsider the structure, you know, when within this period would you advise them to come to you?
Okay, I wouldn't say there's a particular window, but because there are unforeseen circumstances. Assuming a client or an applicant takes the facility with the spouse, and then unfortunately the spouse passes on. For all our products, we do have insurance backing them. So if the applicant or the deceased was not insured, then that means the liability becomes double on the second applicant. So that's where we can look at the option of a restructure. And then let's say you've lost your job, or the rental income from whoever is coming, your tenant has moved out.
Yes.
You're not getting a ready tenant as of now.
Yes.
So the option to restructure your facility is always open. We are mortgage, we are a bank, but we have a human face as well.
I was about to say that even with the mask on, you can sense the warmth about, you know, putting a face to the loan. It's not so much, it's not technical, it's not cast in stone, it's not insensitive, because they're also human beings and they understand circumstances can change. But there are structures and frameworks to follow. And I want to touch on that actually right now. I want to touch on the processes, the steps that one should expect to go through in putting in the application for their buy-to-let.
Okay. So once an individual expresses interest in the buy-to-let facility, you submit all your basic requirements. So we are talking about completing the application form, your passport pictures, your photo ID, the main one, which is your income. So
I saw her eyes pop open. The major one is the income.
Yes, so we are looking at, if you're a salaried worker, we are looking at your 3 months recent pay slips with its corresponding bank statement.
Okay.
If you're self-employed, then we're looking at your audited financials, your company bank statements, and all that. If you're a non-resident, then we take into consideration your credit reports, because we don't have access to your credit bureaus to know how you're performing with your other loans, your credit cards and mortgages over there. So for non-residents, you also support with your credit report. Once all these are submitted, you receive a letter of intent, which is not a contract. It's just giving you is acknowledging formally your documents that we have received, and then letting you know that the process is about to begin.
Okay.
So it gives you an illustration of how the mortgage is going to be. So the property price, the loan amount.
What about that cash flow projection as well? Does it come as part of the LOI?
Yes, please. So that is if you already have a client or you have a tenant to fill in, or you have a tenancy agreement to support with that, then we use that as part of that. But at the initial stages, if you don't have a tenant or you don't have anybody to occupy the property, and then let's say after 3 years you have somebody filling the property, then we can do a restructure. We consider that income as well. If you would want your repayment to remain the same, fine. If you don't want it to remain the same and you want it to shoot up, then we can do a restructure as well.
To me, the restructure is the most important part of the entire conversation, because I feel that customers nowadays are hesitant and are intimidated by the economy, and so therefore reaching out to the bank and asking for a home loan is one of the scariest things for them to do. But trust me, this series is meant to demystify and take away all of your fears. As you've heard, Elizabeth has delved into and touched on the subjects that I have asked. I have also been subject to one of those customers who used to walk past the building because I thought, no, I can't afford it. No, it's not my time. But trust me, once you walk through the doors of First National Bank, you're received with warmth and understanding. And everything is not a one-size-fits-all. It's about what happens in your life and what circumstances you have to make sure they cater to your needs. Thank you so much, Elizabeth.
Thank you, Michelle.
It's been nice to have you here. And if ever you have any further questions, don't forget that you can meet and also ask the lady who loves the colors at the First National Bank branch at Airport. Again, it's been a pleasure being on your screens. One more time, this was the YOHO Series 2021. And I'll always say to you, First National Bank, how can we help you?